Ruh-roh, Raggy, things are not looking bueno. Stocks are getting their teeth kicked in, crypto is crashing, and apparently there's a giant shakeup in terms of social media, and we're getting a blast from the past, as in one of our favorite old-timey social media forms is coming back to life. Obviously, we have a ton of things to get into in this video, so without further ado, don't forget to smash the like button, don't forget to subscribe, and let's rock. By the time the world's largest casino closed today, here is the official headline. S&P 500 and Nasdaq closed lower for a fourth straight day as Nvidia shares slide. Now, I don't know why they're dogging Nvidia like that. Granted, Nvidia didn't have the best day. The real reason might be ASML, and I'll talk on that in just 1 second. But very quickly, here's the heat map of the S&P 500. This is a little bit deceiving because you might be thinking, hey, that looks pretty Christmassy. Yeah, I see some red right here in the semiconductor sector, and I get it. And once again, that's more tied to ASML than it is Nvidia, but this really doesn't do it service. What does it service is when you look at the intraday chart and realize that the SPY dropped 0.6%, the Qs were down 1.2%, but what's even more damning is the daily chart. It looks like the SPY is gunning for this downside gap fill at 497.37. The Qs hit their downside gap fill at 425.84, 425.70 right here. And more so of these breakdowns, major breakdowns. I mean, even look at Bitcoin. We're at this big level of support, testing it. If it doesn't bounce out of this, and I'm saying if it doesn't bounce out of this very quickly, we might be talking Bitcoin vomiting down to 52. I mean, if you look at the crypto liquidations from today alone, hundreds of millions of dollars. So my point here is the overall markets were pretty gnarly bad. Yes, some individual equities ended up holding on, but overall it got brutal. Now, with that being said, I ended up making money today. I ended up making over $1,000 today, which was a good solid 3-4% return on my account. And you might be wondering how I did it. Well, in the morning, as soon as the price started crossing over this EMAs right here around 10:30 in here, when I saw this crossover and I saw that there was no recovery, I sold a bunch of call premium. As in basically I was saying, hey, I think the market either goes down, sideways, or if it does go up, I just don't think it's going to go up that much. And that's exactly how I made my money on the day. Easy peasy, lemon squeezy. And like I said, truly easy. And if you might be thinking, wait, a call credit spread, is that advanced options? You're getting into a call vertical. What am I doing? That's exactly what the trading Discord is for. That's exactly what the Goonie community is for. Here's how it all went down. At 10:04 in the morning, my trading strategy, Piper, told me SPY call credit spread, Q call credit spread, 4 to 5 confidence. And I was like, okay, that's pretty bearish. And then I ended up executing the trade via SPX. There's just some advantages trading European style contracts versus American. So anyway, sold 20 of them at $1 each, bought back half at 40, bought back the other half at 20. So that means in an hour and 25 minutes, I made $1,400. That's a pretty solid, easy day's worth of work. And then from there, I just kind of hung out in the Discord. So if you want to learn about Piper advanced options trading strategy, or just to hang out with a cool community of people, the link is pinned below. Don't forget to use the code Goonie, Goonie. That's how you get in for free. Now, rewinding a little bit, looking at the daily chart on the SPY, you might be thinking to yourself, fairly, why are things going so bad? Why are we getting this breakdown now? Why are we seeing those lower highs, the lower lows? Why are we seeing the S&P 500 gun for this downside gap fill? Why are we seeing the Qs already hit their downside gap fill? And why are we seeing Bitcoin and the rest of the crypto sphere and a lot of major individual equities absolutely vomit? The story is multifaceted, but let's get into the major parts. Why the stock market drop is far from over. So this is a call out from Barron's that, yeah, things have been pretty solid from the start of November of 23 to about now, but it looks like that bullish, easy, slow grind to the upside might be coming to a halt. And like I said, the reasoning is multifaceted. Number one, let's talk about the Fed. Let's talk about exactly what happened today with the Fed at 2 p.m. Eastern. We got the Fed Beige Book, which is basically a fancy schmancy qualitative outlook on the economy, where they basically wrote down everything they've been telling us about the fact that inflation's still high, it's still persistent, and if it stays persistent, we're not going to get rate cuts. Fed Beige Book sees slight growth, moderating wage pressure. All right, that was one thing. And obviously, it's also reacting to what we saw from Jerome Powell, the chairman of the Fed, speaking with his counterpart from Canada yesterday. Wall Street pushes out rate cut expectations, sees risks they don't start until March of 2025. Folks, I don't know if you believe in the Gregorian calendar, but we ain't in 2025. We're currently in 2024. So similar to the Minneapolis Fed President Kashkari, the chairman of the Fed, Jerome Powell, is echoing the similar sentiment that if inflation doesn't come down, we're not getting rate cuts. Economists and strategists now see the Fed waiting until at least September to cut interest rates and are increasingly entertaining the possibility of no reductions at all. So if the Fed rate stays higher for longer, you might be wondering, well, why is that bad? I get that might happen, but why is that bad? Well, if that's bad, that makes money itself more expensive. And if money itself is more expensive, that's going to really hamper demand, which is what they're attempting to do to fight inflation. But that means everything for us, it becomes a bit costly. Mortgages just hit another 4-month high. Not so good. Bank of America economist said that there's a quote-unquote real risk that the Fed won't cut until March of 2025 at the earliest. Hope remains that inflation data turns lower in the next month and gives the Fed room to ease. The next major inflation report is not this Friday, but next Friday we get the PCE report, another major one. It's like the CPI report, but the Fed likes it a bit more. So mark that on your calendar. Once again, not this Friday, but next Friday. So we have that issue. Obviously, you've probably been paying attention a little bit to the fact that there's renewed global conflict between Israel and Iran. But on top of that, we're in earnings season, and what's been keeping the market high is really because of AI and semiconductors, NVIDIA, AMD, and crypto and all that stuff. Well, even that sector is starting to show signs of weakness, and we learned that from one key earnings report that we got this morning, ASML. ASML earnings drag semiconductor stocks lower. So NVIDIA, AMD, Intel, those are all semiconductor stocks. They make the processing chips, or they're related to that world in one way or another. And when we see this weakness, people extrapolate that out to the entire sector, and that's why we saw the whole sector get kicked in the balls today. Chip stocks fell today, Wednesday, after the semiconductor manufacturing equipment maker ASML said that sales suffered a steeper drop than investors had expected. Its main customers include TSMC, Samsung, and Intel, and the world's top process foundries, which in turn make chips for AMD, NVIDIA, Qualcomm, and Apple. So basically, some of the biggest, most influential stocks in the planet right now are, maybe the demand isn't quite there. But fast forwarding it, it's not just in this particular world. Check this out. Tesla asks shareholders to vote again on Musk's $56 billion payout. Yes, I said billion with a B. I wish I was getting 1/10 of that payout, but I guess the content I make just isn't that good. Tesla asks shareholders to reapprove CEO Elon Musk's $56 billion pay package months after a Delaware court found it deeply flawed and voided it. Just so you know, his pay for 2023 just came out and it was zero. It was zilch. It was goose egg. He got paid nothing as the Tesla CEO last year, just so everyone knows. The company is also seeking to reincorporate in Texas as a direct result of the court decision. Now, I have to ask you, if you are paying attention to Tesla, if you're paying attention to Elon, or if you're obviously invested trading the stock, would you vote yes to give him this pay package, or would you vote no? Let me know in a comment below. But also what I want your comment on is Elon bringing back some social media from the dead. Bring back Vine. 3 words that caused all of the Twitter/X sphere to go crazy today. Obviously, a lot of people voted yes, voted over 70%, and we're seeing this massive fight in terms of short form content. Vine versus TikTok versus YouTube Shorts versus Instagram Reels, and there's probably many others that I'm forgetting about. But right now, big tech, it's a huge battle for who can get the most attention when it comes to short form content. Right here, it was trending after this, trending 6, and honestly, by the time you're watching it in US trends, it might be higher, but Vine is now trending. So obviously there's quite a bit of demand to bring it back. And I know this might be a little bit of a conspiracy theory, but I wouldn't be surprised if the government actually wants this to happen, because they don't want TikTok to be a thing. So they probably want another platform that has roughly equivalent short form content, at least being held by a US company rather than ByteDance, which is owned by the CCP. I mean, check this out. TikTok divest or ban bill heads to fast track in the US Congress. So when we see this happening, and Elon all of a sudden trying to revive Vine, which Twitter owns, well, now X owns it, which means he owns it, which maybe people didn't know that about that. But anyway, my point is we see this rise in TikTok getting banned at the exact same time that Elon tried to bring back Vine, and they're very comparable. Maybe it's just good timing. Maybe it's just a good business opportunity, or maybe they're actually talking to each other and saying, okay, hey, can we figure out a plan? But that's not the only social media platform that had craziness. Trump media shares rise more than 20% after days of decline. So DJT, that's the ticker symbol for Donald J. Trump's equivalent to Twitter, aka True Social, and it ripped upon the ticker getting switched, basically the de-SPACing progress. It went from DWAC to DJT, ripped because of that. Since then, it's had a pretty brutal hit, but apparently as of today, it found some sort of bottom because it had a beautiful 20% rally. If you caught it, congrats to you. Now, in terms of the remainder of the week, things are going to get quiet. Thursday, April 18th, in terms of macroeconomic events, there's not much going on. And on Friday, there's literally nothing listed. But in terms of earnings, a lot going down. So we got some negative news from ASML this morning. I hope you're watching this video in time because tomorrow we're going to hear from TSMC. If TSMC misses, look out below. Tech is going to get absolutely rocked. On the flip side, if it does well, I see tech and thus the whole market bouncing. After the market closes tomorrow, Thursday, we're going to hear from Netflix. And then just so you know, Friday, we have American Express and P&G and Schlumberger. So you might want to check those out. Now, if you want all of this information in an easy, accessible way, that's why I put out this newsletter, the Goonie newsletter, every single weekend to your email inbox for 100% free. So if you're watching this right now, you might as well sign up because it's not going to cost you a dime. But I break down the week, all the major things that happen. I let you know about all the macroeconomic events. I give you all the earnings. And then on top of that, I give you the seasonality for each individual trading day. So for Thursday, April 18th, it's leaning a bit bearish. It popped, it was sideways. In the past couple of years, it's been selling off, but this is the seasonality of just this individual day. And then to conclude the week, once again, kind of a weird day. It's neutral because it was bullish for a while, recently going bearish. So historically, kind of a choppy mess. But anyway, that's in the newsletter. Once again, in the description of the video, mattkohrs.locals.com. Not only is that how you get the newsletter, but that's how, if you want, you could sign up for the Discord. But that's what I have for you in this video. I hope you crushed in the market today. I appreciate your time. I'll catch you in the next one. Peace out.